Hey there and welcome back to the channel. So today we're diving into something that every business owner needs to understand, but it's often overlooked. Subsidiary ledgers. Specifically, we'll talk about cash, accounts receivables, suppliers or payables, inventory, and fixed assets. These are not just accounting terms. They are really critical pieces that make up your financial foundation. We're going to explore how to define them, why they are important, and how you can use these ledgers to rebuild your balance sheet if you're already up and running, and how you can use these ledgers to rebuild your balance sheet if you're already up and running but want to get things back on track. We'll even touch on reconciliation, making sure these ledgers match up with what's in your financial statements. And if you stick around, we'll talk about a few other ledgers that could be helpful in your business. But first, a little bit about me. So my name is Dennis Hilario and I've been in the trenches of business for over 20 years, working with startups, scaling businesses, and everything in between. So in this channel, we talk about practical business tips, strategies, and systems that you can apply to your business today. If that sounds like something you're into, just hit that subscribe button and ring the bell for notifications. You don't want to miss any of this content that's all about making your business smarter, faster, and more efficient. Now let's get into it. So let's start with the most critical aspect of any business. It's cash. When we talk about cash in subsidiary ledger, we're not just talking about bills in a drawer. We're talking about cash on hand and cash in bank. Your ledger needs to break this down separately. Why? Because the way you manage your cash, what you keep in the bank versus what you keep on site, impacts both your liquidity and security. Of course, you want to know exactly how much cash you have at any given moment, broken down into each bank account in the bank and each cash ledgers. If you don't, you're flying blind. So cash on hand is for immediate expenses, while cash in the bank gives you flexibility and security. Proper tracking allows you to manage working capital, make quick decisions, and plan for the future. So if you are rebuilding your balance sheet, start by reconciling what you think is in your cash account with what's actually there. Check your bank statements, petty cash bank, petty cash box, and any other cash equivalent or accounts to get accurate figures. Make sure they match your subsidiary ledger and ultimately your balance sheet. So again, in subsidiary ledger, you have to have that record of each of those bank accounts. It can be in Google Sheet or in a manual ledger or in your accounting software. So after setting up the beginning balances of each, you now have to always update those subsidiary ledgers by recording every increase and decrease in its running balance. Second ledger is accounts receivable, which is essentially a list of all your customers and how much they owe you. So this ledger, which is each customer, is not just names and numbers. It's the life pulse of your cash flow. If your receivables are too high or are aging too long, you've got a problem. So knowing how much is outstanding each customer allows you to make better decisions about your cash flow. Are you collecting on time? Is a particular customer always late on payments? Your accounts receivable ledger will tell you. So this impacts your liquidity and your ability to invest back into the business. If you need to rebuild your receivables ledger, pull out all of your unpaid invoices and organize them by customer. Make sure to include details like invoice date, amount, and payment terms. Compare this to what's showing up in your balance sheet. If the two don't match, you need to investigate why. Maybe some payments got lost, or maybe you recorded something incorrectly. Either way, reconciling these numbers is key. Make sure na moving forward, you always have to update the subsidiary of your receivable, which are the records of each customer. Every increase in accounts receivable for that customer and every decrease, which are payments of the customer and the running balances per customer. Number 3, suppliers or accounts payables, which is what you owe to others. So this could be for supplies, inventory, or services you use regularly. Your supplier ledger or accounts payable ledger will show how much you owe to each vendor, breaking down the billing balances. The health of your supplier relationships can make or break your business. You need to know how much you owe, when you owe it, and how to balance that with your payables. Paying on time can give you leverage for discounts, and maintaining a clear supplier ledger means no missed payments or no nasty surprises. So rebuilding this ledger means going through all unpaid supplier bills and adding them to your subsidiary ledger. Include payment terms and due dates. Compare that with what's in your ledger to what's in your accounts payable on the balance sheet. So any discrepancies need to be corrected. Maybe an invoice didn't get entered or a payment was not recorded properly. Now let's talk about inventory. What you have in stock. So this ledger tracks the items you sell, their quantities, and their financial value. It's more than just a list of stuff. It's a critical tool for understanding how well you're managing stock and cash flow. Having too much inventory ties up cash. So too little inventory means you're missing out on sales. Either way, tracking inventory accurately helps you strike that perfect balance. If you're rebuilding, conduct a physical count of all your inventory. Then compare that with what's listed in your ledger and your balance sheet. Any discrepancies between what you physically have and what your books say need to be reconciled. Are items missing? Did you record things correctly? Inventory reconciliation is essential. Then finally, let's touch on fixed assets. These are your equipment, computers, furnitures, vehicles, and anything else that's part of the long-term operations of your business. These assets depreciate over time, so your ledger needs to reflect both their value and how that value decreases each year. So tracking fixed assets helps you plan for replacements and expansions. It also impacts your taxes since depreciation is something you'll want to account for to reduce your taxable income. So for fixed assets, gather receipts, invoices, and depreciation schedules. Make sure your ledger includes purchase dates, original cost, and depreciation. Compare these figures to what's on your balance sheet. If they don't match, then adjust your records accordingly. Now, here's the big piece, reconciliation. Your subsidiary ledgers are not standalone. They feed into your balance sheet, and they need to match up. That's the whole point. It's like taking the puzzle pieces and making sure they fit together perfectly. If you don't reconcile these ledgers regularly, your financial statements will be off, and that can lead to bad decisions down the road. So check your cash, receivables, payables, inventory, and fixed assets against what's recorded in your balance sheet. If something does not add up, investigate. It might be an input error, or it could be something bigger. Either way, your job is to find and fix the discrepancy. So while we have covered the major ones, keep in mind that these are other subsidiary ledgers like payroll liabilities, tax liabilities, or even project-specific costs. Each business is unique, and depending on your operations, you might find certain ledgers more useful than others. The key is to use them to stay on top of your financial health. So that's the basics of subsidiary ledgers. Again, cash, accounts receivables, AP, inventory, fixed asset, each one plays a vital role in keeping your business running smoothly. If you're trying to rebuild your balance sheet, make sure to reconcile these ledgers regularly to get a clear, accurate picture of your financial health. Thanks for sticking around. If you found this helpful, make sure to hit that like button, subscribe, and ring the bell for notifications. Let me know in the comments what topics you'd like to dive deeper into next. Until next time, keep your business sharp and your numbers sharper. DX Your Life in Business. Have a great day.